Welcome to this edition of the Multifamily Investor Nation webinar series. Excuse me there. Today, we're going to be talking about these considerations for active versus passive apartment investing. And so we're going to talk about what are your goals for investing in real estate? What motivates you and what doesn't? Are you a leader? What questions should you ask yourself to determine if you are better to be just an active investor or to be just a passive investor, or maybe even a combination of both? And of course, we'll add some additional things in there as well. Plan for this webinar is to be about 15, 20 minutes, and then we'll open it up for some questions and answers for those of you who are on with us live, so you can ask some of these questions, so you can get some answers to some of the questions that you might have. So first off, the introduction, a little bit about me. I'm one of the managing partners of this group called PassiveInvesting.com. We're a national real estate investment firm that places private equity from our investors into good, safe, solid, cash flowing assets, primarily in the multifamily space. And so if you want to find out more about me, you can click on this little Meet the Team button here. And on the Meet the Team page, you can click on my name here. And you can watch this video that I created for you. So you can take a look at that. That way I don't take too much time during the webinar today going over my background. But I am married. I have 4 children, 3 girls and a boy, and we live and reside and work here in Columbia, South Carolina, specifically in the Irmo, South Carolina submarket within Columbia, South Carolina. Now, for those of you who are joining us, and maybe you're thinking that you might want to be a passive investor, you can go to the website, PassiveInvesting.com. I'll type it into the chat box here for those of you who are joining us live. It's not that hard to remember, but just go to PassiveInvesting.com. On the top right-hand corner of the screen, you can see this little button that says the Join the Passive Investing Club. If you click on that button, there is a form that you can fill out. And if you want to see if you want to join us on some of our future opportunities, you can fill out this form and someone from our team will reach out to you, schedule a phone call with you, discuss your investment goals to make sure that you are a right fit for us and vice versa. So again, I want to mention also about this MFIN Summit that's coming up. You can go to mfinsummit.com to find out more information about this event. It's coming up on January 21st, 22nd, and 23rd. So only about a little over a week away from this particular webinar. But even if you are watching this recording and you're thinking, well, it's already past the event page, that's okay. We have these events in January and June of every year. And so our next one coming up will be in June of 2021. And so you can go to mfinsummit.com and find out the details for the next summit that's coming up. So we'll look forward to having you there. And we have over 40 speakers are going to be at this event. And we have a lot of interest, a lot of people that have already registered. And we're looking to have over 500 people attending virtually this event online. And so if you go to the bottom of the page, you can see some of the topics that you can expect to hear about at the summit, but then you can also see the event schedule at the bottom of the page as well. So it'll be a Thursday, Friday, Saturday session, and we're going to have 2 rooms going on at the same time. So and you'll be able to pick which room you want to go into, but you'll have access as an attendee to all the recordings. So for some reason there's something going on in room 2 and you're in room 1, you'll still be able to receive the recordings for that particular session. All right, so let's go ahead and dive into this topic. What do you want to be? Do you want to be an active investor or do you want to be a passive investor? And I thought it would be good for me to go ahead and start off by telling you a little bit about how I got started in the space. And it'll give you a little bit of clarity maybe on what you might want to do, or maybe give you some thoughts to think about. So when I got started in the multifamily space, I was running a group of medical clinics. So my wife and I, personally own 100% of 4 non-surgical orthopedic medical clinics that are located here in South Carolina. We have one located here in Columbia, South Carolina, which is our flagship and headquarters, where we have all of our administrative team here as well. We also have one located inside of North Augusta, South Carolina, Greenville, South Carolina, and Charleston, South Carolina, to cover a good majority of the state with some of the specific procedures that we do. And we also have an online company called shopanatomical.com, where we sell all types of skeletons and skulls and brains and hearts and all kinds of plastic models for colleges, universities, and doctors' offices across the country and around the world. And we have both of those businesses that cash flow pretty well. And so we needed to have a place to be able to invest our capital because we were paying large amounts of money in taxes to the government. And so the tax benefits of real estate investing is really what drove us into starting the passiveinvesting.com team and being able to grow it to where it is today. And so now, fast forward, we're coming up in our fourth year. We have grown the company to a point where we have enough depreciation that's offsetting our income from the clinics as well as from the other business, the online business that we have at the same time. And so that's great. Income has gone up, taxes have gone down because of the depreciation benefit, and it's been really, really great. Well, the thing that you have to ask yourself is, where do you want to be? Do you want to stay inside of your business that you have now and to be able to still do that, and then also start the real estate, or do you want to completely resolve or remove yourself from not just your business, but maybe you're working a W-2 job, maybe you're thinking about stepping away from your W-2 job and becoming more active inside of multifamily investing. And so those are some of the considerations and the thoughts that you have to think about when it comes to taking the plunge and actually diving into doing multifamily real estate full time. There's definitely different tax benefits, whether you do it actively or passively, but you also have to calculate the lost revenue from quitting your W-2 job or maybe even stepping away from your businesses. And that's what I did, is I actually stepped away from my businesses and promoted my internal staff to a CEO position so that they can actually run the business and I don't have to be there. And it's been actually now coming up on 3 years that I have actually not stepped foot inside of my clinics during business hours, because I have a team of about 50 people that are part of that group, and they run things and manage things. And they do everything for us so that we don't have to be there on a full-time basis, which has been great because it allowed us to be able to reach that full-time real estate professional status to be able to have the most benefits from the tax perspective to be able to offset our other income. But I meet a lot of our investors that they really enjoy doing what they do, whether it be a business or maybe they're in some form of a W-2 position, whether they're an engineer, attorney, accountant, doctor, lawyer, whatever it may be. And they really kind of enjoy what they do and they don't really want to quit. So the passive route is really kind of the best option for them. And they can still offset with those depreciation benefits, the cash flows that they're receiving off the investment, but also they're able to offset other passive income with their passive losses. And so again, I am not a real estate CPA. I'm not an attorney, anything like that. So I'm giving you my information, the information that I have gleaned from my experience speaking with a lot of these other professionals and doing a lot of the research on my own. So in anybody's situation, it can be different. And so you want to make sure that you reach out and you consult with your own attorney and CPA and financial advisor to make sure that the decision that you make is the right decision for you with your specific situation. So again, you have to go back to, what are your goals for investing in real estate? Are you trying to quit your job? Are you trying to quit your business? Or are you trying to just replace cash flows so that you can eventually do that? And so you have to ask yourself those questions along the way. Ideally, what I like, which is what we've done, my wife and I, is we kept our businesses so they were still cash flowing and are still cash flowing today. And then we started in the real estate side of things so that we're still cash flowing and we still have the income from the businesses, but then we also have started another business that allows us to have the depreciation benefit to offset the other business's income. Now, one of the other considerations you might want to think about when it comes to investing inside of multifamily is about what motivates you, right? And what maybe doesn't motivate you. So, do you like building a team? Do you like becoming a leader? Are you a leader yourself? Do you have the qualities to be a leader, right? Do you have the ability to be able to communicate effectively and efficiently to your team? And do you really want to start a business? There are risks involved with starting a business, and none of you on here should get into the apartment syndication space if you do not treat it like a business. This is not a side hobby. This cannot be treated like a weekend job or anything like that. My opinion is that this has to have full-time efforts on the business. Our passive investors expect full-time efforts. Myself and my wife and I, we have invested in 38 different multifamily syndications over the last several years. And we personally only invest with other operators that are full-time in the business. We want to make sure that they have those full-time efforts that are in the business as well, because we earned our money, and it was a very hard process, right? We have hard earned money, and we want to make sure that we do not lose. And I want to make sure that I have full-time efforts on it. So you're thinking about getting into this space, I believe that it needs to be a full-time effort. Now, that doesn't mean that's how you have to get started, right? There's other ways to get started inside of apartment syndication without being full-time. So you could actually JV partner with another group, right? That's actually full-time in the business, and you can start to build your credibility, build your experience, build that kind of portfolio, if you will, until you get to the point of having enough income to be able to replace your current income so you can actually do it full time, right? And so those are some of the additional considerations that you have to think about and you have to be going through your head as you make the decision. Do you want to do this actively, or do you want to just be a passive investor? We have a lot of investors that follow us on the Multifamily Investor Nation. They find us because they think that they want to be an active investor, and they realize, you know what, this is a lot of work. Yes, each one of the individual components is not hard, but there's so many different components to this business that it can be complex and complicated from that standpoint, just because there's so many different pieces and moving parts to it, that they go, I don't want another job. I want this to be more of a passive cash flow opportunity for me. And the returns are really nice for those passive investors. And so they just decide to forget about it. They go to our passiveinvesting.com website, they fill out the form, and they join us on some of our future opportunities. And we even have active syndicators that are actively invested with us, but they're self-directed retirement accounts, because a lot of these investors have these self-directed retirement accounts. They're acquiring properties on their own, but they're not able to invest alongside themselves inside of a syndication. So they reach out to us and say, hey, I know you guys, I like you, I trust you, I want to, and you have the credibility that I want to be able to put my money with you. And they invest their self-directed retirement accounts with us, and they're active syndicators, right? And so depending on where you are on that spectrum, whether it's active or passive, we can definitely help you with that. And there's also a lot of other groups out there that are really good, solid operators that you could potentially invest with, but you have to make sure that you're investing alongside them properly. And I actually, let me see if I can pull this article up for you real quick. Let me see here. I think that we posted this already. This is an article that I wrote on the 7 red flags for passive investing. It's not necessarily, it's 7 right now, and sometimes I'll add them to it, but some of you are always curious and asked me about, what are some of these red flags. So let me see here. It looks like Melissa has the link here. I'll copy this and paste it to everybody for all panelists and attendees, so you can take a look at it. If you're on the recording, you don't obviously have the link, you can go to passiveinvesting.com, go to the Knowledge Center, and in the search box in the Knowledge Center, you can type the word red flag, and you will find the article on these red flags for passive apartment investing. And this is actually a list that my wife and I came up with as we were looking to place our own capital inside of these types of offerings. All right, so kind of covered what are your goals for investing in real estate. You have to figure that out for yourself. What are some of your goals? Whether you want to quit your job, keep your job, same thing with your business. What motivates you and what doesn't? And another thing that to kind of mention around the what motivates you and what doesn't is you have to think about what do you like to do in the business, right? Do you like to do underwriting? Do you like to talk to investors? Do you like to find deals, working and building broker relationships? Do you like the construction and the CapEx and the renovation aspect of it? Do you like all of those or one or two of those? And maybe you should consider, as you start to start your own apartment syndication business, maybe you start to a partner with another group, right? Another operator, to be able to fill in some of the gaps that maybe you don't like to do, right? That's kind of how we built passiveinvesting.com. Is, I really enjoy the educational side of things. I really enjoy the investor relations side of things, and the also setting some of the overall strategic objectives of the group. But I really don't like the minutia of the underwriting. I don't really like the minutia of putting together a CapEx plan and a pro forma and renovation budgets and stuff like that. So I found other partners that I can partner with. So we have one of our managing partners, Danny Randazzo. That's what he helps us with, is the financial due diligence, the financial underwriting. I have another partner that helps with the construction side of things and the acquisitions piece. That's Brandon Abbott. And you guys have seen them on these webinars before, but that's what you have to think about. What do you really like to do? And maybe find other people to kind of fill the gaps. I would caution you that before you find a partner, make sure that they have balancing and complementary skill sets. Don't try to partner with somebody that's, if you like underwriting, they like underwriting, you think it's going to be a good fit. It's not going to be a good fit. Those are the types of partnerships that fail because both of you will butt heads at some point because of that type of similarity that you guys have. You need to find somebody. And the hard thing is that you, if you like underwriting, will connect with people that like underwriting pretty well. But the problem is you will butt heads in a partnership. You need to find somebody and fight the urge to partner with somebody who likes what you do, and find somebody that can find those, has those complementary skill sets than what you have to be able to make a successful partnership. And of course, asking yourself that question, are you a leader? And then finally, what questions to ask yourself to determine if you are a better active or passive investor. This kind of goes back to those goals, right? For your investing. What are your end goals of trying to become active or passive? Do you want to start another business? Do you want to have another job? What do you want to do with the rest of the life that God has given you on this great green earth, right? And what kind of legacy do you want to build for your family, for many generations to come? So let me go ahead and open it up. I'll go ahead and look into the chat box here. I haven't been monitoring it too much, but would love to see any questions that you may have on this particular topic of considering these different considerations for being an active or a passive investor inside of apartment investing. So I have a couple of questions that are in here right now, and so I am going to talk about these here shortly. All right. So the first question coming in here is about how does depreciation recapture play? Depreciation recapture. Let me just rephrase this. Okay. How does depreciation recapture play out when investing passively through a syndication? And so depreciation recapture, for those of you who are not familiar with that, is when you go to sell an asset that maybe you've held on to for 3 to 5 years. When you go to sell that asset, if you have taken any depreciation losses on your taxes, you could potentially, because your basis is being reduced inside of the property whenever you are taking that benefit on your taxes on a yearly basis, then when you sell that asset, because your basis is now lower, then you will have what's called depreciation recapture, and you will pay capital gains tax on that particular on that depreciation recapture. And so that is something to have in consideration, but that's also why we like to do 1031 exchanges, right? So in our group, passiveinvesting.com, our goal at the end of each investment is to 1031 exchange the proceeds into the next investment, right? Now, for those investors who want to get out, they'll have an opportunity to be able to get out. So they don't have to, and they're not forced to go on to the next one, but they will be required to pay that depreciation recapture when they leave. But our goal at passiveinvesting.com is to be able to build our wealth alongside of our investors' wealth, not for just a few years, but for many decades to come. Because and the only way we can do that is if we're utilizing these types of 1031 exchanges and growing and moving our investments into these different investments as we continue to grow. So great question there. Tio has a question here. Would love to replace my W-2 with real estate passive income, but how many deals does it take to get there? Could be a lot of $50,000 deals for a high income earner. And the answer to that question is yes. It is true that depending on your income, it could potentially cause you to have a lot of $50,000 deals, right? Or maybe you up that. Maybe you get to a $75,000 investment or a $100,000 investment, and then you can get there a lot faster. The math on this is actually fairly easy to do, and as far as the monthly passive income. So if you're trying to figure out how you can get, so let's just say $250,000 a year in passive income, you basically have to figure out backwards how much based on the average, monthly return you're going to get, which is usually 7 to 9%, somewhere around in there. Obviously, you'll get more return when the deals sell, but during the hold period, the cash on cash is usually that 7 to 9% period. You can do the backwards math to figure out how much you're actually doing at that point. Okay. Let's see here. Question here is, how can I partner with you as an active GP? So as an active GP, we do have opportunities for JV partnerships, which is great. And you can certainly reach out to us and have that conversation as to whether or not you would like to partner with us. We can have those conversations. Someone from our team can have that discussion with you to see if that's an opportunity. We do have a few of JV partners that have been with us for many properties, and of course, we give them priority when it comes to the next investments that we have because they have been with us from the very beginning. But we occasionally do have opportunities for other investors to particularly partner with us. So if you want to go to our website, fill out the contact us form there, we could reach out to you and discuss those opportunities with you. All right, so we have a couple questions here. Can you please clarify why our return on capital is bad for investors, passive investors versus return on capital? So return of capital versus return on capital. So this has to go. Let me just how to rephrase this a little bit. What is the difference between return on capital versus return of capital? So return of capital is when you're getting these monthly or quarterly distributions on these investments, your capital account is going down, right? That's return of capital. So and then you're not technically making a return, you're just basically getting your capital back. And so from a tax perspective, some people think, oh, that's great because I won't have to pay any taxes on my cash flow. Well, with depreciation that you get, you're not paying any taxes on it anyway because you're reducing that tax liability with the depreciation. So you don't really need that aspect of the return of capital that people sometimes do in these types of investments. However, on the return on capital, you're getting an actual return on your capital. So if you put $100,000 into an investment and you're getting monthly distributions, those monthly distributions are not reducing that initial capital account, okay? And so the reason why that's important is because if you're in a deal that has a preferred return, let's just say 7 or 8% preferred return, those preferred returns are based off of your unreturned capital contributions, which is that initial capital account minus any return of capital. So what's happening is every time you receive those monthly distributions, and it's reducing if the operator does return of capital on the monthly distributions or quarterly distributions, now your unreturned capital contributions are now being reduced every single time you receive a distribution, and your preferred return goes down each time as well because those preferred returns are based off of the unreturned capital inside of the investment. And if you go to our website, passiveinvesting.com, go to the Knowledge Center and type in unreturned capital contributions. I wrote an article recently on those unreturned capital contributions and how they're actually calculated. And so you can take a little bit of a deeper dive into that particular topic there as well. A great question. That there's a lot of different questions when it comes to whether you should be receiving a return of capital, return on capital. My recommendation is to only invest in opportunities that are return on capital so that you can have a better, more solid return for you as the passive investor. All right. Next question here is, let's see, a couple of questions that have come in here now. Did you have any mentors in real estate or even business when you started out that provided guidance and feedback in your pursuit of creating your real estate business? So Zach, the answer to that question is a resounding yes, double yes. So I have always had a coach or a mentor inside of my business or inside of real estate, and I even have them today. And I recommend trying to find a mentor that your personalities mesh well with. I've been with some mentors before where my personality did not mesh with theirs, and it was a bad kind of opportunity for me to be able to try to learn from that particular person. But if you find the right match, and if you find the right match, it can be a really solid thing for you. And one of the things that I would suggest is that you find someone that is doing what you're doing right now. So if they've already retired and they're not really doing active deals or anything like that, they're probably not going to know as much as somebody who's actively doing deals right now. And they're in the trenches doing deals. And so when I was seeking a real estate mentor, I wanted to hire somebody that I had direct access to them and not one of their coaches or students. And I wanted to make sure that I could get their personal cell phone number. So if I had any quick questions that I need to ask them, that I could actually do that. And I wanted to make sure that they were actively doing what I was wanting to do, and that they had really big goals and they were wanting to achieve what I was wanting to achieve, or even bigger and better and greater, right? And so I hired somebody that allowed me to be able to get to where I am today. And that person is no longer doing any type of coaching or mentoring right now. But he has been a phenomenal mentor to me. And he today is still a mentor for me in my business. And I would highly recommend that you do interviews with different people when it comes to the multifamily side of things. There are a lot of different coaches and mentors out there that can help you. Next question is the equity multiple calculated with both the passive income and the initial capital, or is it just the initial capital and the passive income is on top of that? So the question here is about the equity multiple, and the equity multiple is calculated based on if you put in $100,000 into an investment and you have a 2x multiple at the end of the day. That means that $100,000 investment, when that deal goes full cycle, is now $200,000. Okay, so that means you're going to get when you sell the asset, that 200,000 is going to include your $100,000 initial investment plus a return of $100,000, right? And so that's what that 2x multiple comes into play. Of course, if it's a 3x multiple, then it's 300,000, right? But typically, you're going to see most deals are going to be that 3 to 5 year hold period, sometimes upwards to seven years. And those equity multiples are going to be usually around like that 1.8 to about 2.2, 2.3, depending on the investment and the asset class and the risks associated with it and the profile and various things like that. But that's that equity multiple is you put 100,000 in, you get 200,000 out. That 100,000 includes the monthly cash flows as well as the sale proceeds at the end, and that would be that 2x multiple on that initial capital. So great question there. Let's see. In your experience, someone that has an equity position on the GP, how much per unit is received on a monthly basis? So this is another good question when it comes to how much you as the GP is making off of the investment. And for us at passiveinvesting.com, to make our deals more conservative, we choose not to take out our monthly cash flows as a GP when we're able to do that. And so what we do when we're able to have those cash flows take out, we keep those cash flows into the asset as extra operating reserves, and we don't make ourselves whole on that until we sell the asset, until we go full cycle. And so a couple of reasons for that. Number one, we don't need those cash flows to live off of. We're very well financially backed, so we don't need that. But number two, it also makes that deal more conservative. It has extra cash flows, extra operating reserves, which is actually really good for the investors to have that extra peace of mind when it comes to those investments. Instead of just constantly trying to pull off cash off of the investment, there's money that can actually stay inside the investment and can continue to ride out any storm if for some reason a storm comes along that we need to actually ride. But you can obviously do that. But for the most part, those GP monthly shares is going to be dependent upon the investment. So it depends on the underwriting and the cash flow. So it's hard to kind of give a general rule of thumb, if you will, that even if you wanted to pull those out, what they would look like, because every investment, depending on the size of that investment, is going to change based on the amount of the cash flows that are coming in off that particular investment. So next question here. I'm going to take maybe one or two more questions and then we'll wrap it up for today. What has been the average impact on your real estate investments arising from renters' inability or refusal to pay rent due to COVID? Oddly enough, it has been fairly minimal. So there's been earlier on when COVID first hit in March of 2020, we started having some concerns around April, May, and June of 2020 as to when that was going to hit. And so far we haven't had a major dramatic impact on any of our assets because of COVID. There's been maybe one or two assets that dropped more than we wanted to, but we are already starting to see some of those coming back as those residents are starting to leave on their own, right? Most of them realize that they are building up a balance as they are staying in that particular investment, not investment, but that particular unit. And so even though they're not being they're not being forced to leave, there will still be a balance. And so it can affect their credit, it can affect their ability to rent in the future. There's a lot of those things that are at play, which are impacting a lot of renters' decisions to make sure that they are paying for the rent. And that's the thing. That's one of the nice things about multifamily is that there is some recession resistance to these types of investments where next to food, the housing and the roof over their head is the next thing that most people will pay. And we've been seeing some really good collections on our assets and haven't seen a major shift in that. And now inside of in my LP portfolio, my passive portfolio, where I have 38 different investments with 14 different operators at this point, there has maybe been about maybe 10 or 15% of them that have not stopped distributions, but they have gone from monthly to quarterly distributions just to maintain the cash reserves during certain periods of time where they think they might need that extra reserve, if you will. But for the most part, it has not been a major dramatic impact on the overall returns when it comes to the COVID-19 renters' inability or refusal to pay. Well, that's all I have for today. Let me see if I can refresh my screen here. We're doing something a little bit different today. We are not today, but this week. This week, we actually have a special webinar that we're going to be doing. And I want every single one of you that are on the webinar today to make sure that you attend the next webinar. It is going to be a phenomenal webinar, and you can see on your screen right now, we're going to have a special guest on Thursday this week. So 2 days from now, on Thursday this week, January 14th at 12 p.m. Eastern, so right at noon, we're going to have Trevor McGregor with us. And he's going to be talking about how to master time management as a real estate investor. This is a great topic to talk about following the discussion that we had today as to whether or not you want to be an active or a passive real estate investor. So make sure that you go to our website. For those of you who are joining us live, I'm going to type it into the chat box here, and you can go to multifamilyinvestornation.com and go /MFIN webinar. If you go to that website, you can fill out the information, join us for Trevor McGregor, and learn a lot more about how to manage your time and really not just manage it, but master your time as a real estate investor. So also don't forget to go to mfinsummit.com and register for the next MFIN Summit, which is coming up next week, January 21st, 22nd, and 23rd. Hope you have a good rest of your day. We'll see you in a few days.